Hello Theta Gang! It's Mikey Millions here, and it's finally time to dive into the long-awaited second season of the Robinhood 3K Challenge. It's been a long time coming, and I'm excited to finally get rolling again. We've got quite a trip ahead of us, but like any good Netflix series, we've got to start off with a last season recap to welcome the new Theta Gang warriors who will join us on this season's adventure, so let's get started. Season 1 was a wild ride, with a methodical grind on the way up, only to get taken down a notch during the coronavirus crash and then subsequently Thanos'd by JPOW and his 24-hour printers. The series began with a demonstration of the wheel strategy on AMD, a fan favorite, which brought regular income for a few weeks. But we quickly got bored of wheeling and wanted to show off some new strategies, so we got into spreads for a couple of episodes. But as the series was still finding its footing, I made the mistake of thinking you guys would demand to see my analysis behind every single trade I made. And therefore, I only traded one spread at a time since I didn't want to do anything in the background and I wouldn't have time to cover every trade. During those weeks, I really only had about $100 out of $3,000 invested at a time, so it was a very slow moving time for the account. I won't make that mistake again this season since I noticed you all are totally fine with me trading more than just the one thematic stock of the episode, as long as I mention the others after the fact. But anyway, we got some momentum toward the end of the season by wheeling and using spreads at the same time, but as luck would have it, the great COVID-19 plague of 2020 wiped out most of our gains for the entire season in episode 9. I was still alright overall, but the season finale was to be my YOLO episode so I could end the season with a bang. That YOLO began on March 23rd, and if you remember how the world felt on that day, it was as though the 4 horsemen of the apocalypse were breathing down our necks. The United States was locked down. China suppressed domestic factions. Italy ran out of spaghetti. Germany invaded Poland. There was no other option but to YOLO on SPY puts. At 9:30 in the morning on Monday, March 23rd, I YOLO'd most of my account into put debit spreads, expecting to finally cash in on the annihilation of the human race. However, my calculation was less than accurate. By 11:30 a.m., the market had bottomed. JPOW's printers kicked in, and the market hasn't looked back since. I bought puts literally 2 hours from the market bottom. And as the printers sliced through bears like me and built a pile of ursine corpses for the bulls to climb, my puts crumbled into nothing but the echo of a once beautiful account now forever scarred by the stain of original sin, betting against America. Fortunately, I also sold puts at the very bottom as the other side of my put debit spread. And although my long puts decayed into dust, my short puts kept the nails off my coffin. By the time I closed with a 90% loss, pretty much the only money left in my account was from the puts that I sold expiring worthless. This account looks like I just got crushed by Corona and then didn't recover. But the March 23rd market bottom wasn't here, it was here. And if I had just stayed the Theta Gang course instead of YOLOing, I'd be in a better position. But you gotta make do with what you got. And by late April, what I got was an account worth precisely $1,776. $1,776. And that's when I was reminded, this is the United States. I have free brokers. I couldn't go down like that. It was time to rewrite the stars. During the off-season, I liquidated much of the detritus that accumulated in my account, ditching shares of broke-ass companies in exchange for cold, hard cash. I began using a strategy called the Poor Man's Covered Call, or PMCC, to do what I call farming theta. In a Poor Man's Covered Call, you use leaps instead of shares as collateral to sell covered calls, like a discount wheel for those people who are too poor to afford a proper set of shares. The goal is to collect regular premium, just as in the wheel, but in the PMCC, you have some extra restrictions. I wanted to make a video on this before releasing this episode, but it'll probably be another couple of weeks. For now, know that the PMCC is like getting Sierra Mist when you asked for Sprite. It gets the job done, but you can taste the difference. In any case, the PMCC farm brought the loot, just like I needed, and I was getting back on track. When the Trump bucks came in, I tried to deposit $120 for a Google YOLO to speed things up. I realized very quickly there's no way $100 is enough for that, so I dropped some more cash to about 270 Trump bucks total and went in on a Google FD. Of course, that trade went to shit, and my roasted Trump bucks disappeared from my account. And as a side effect, did you guys realize that when you deposit into Robinhood, you don't just get a spike where you deposited, it actually bumps up your whole chart back to the beginning. I wanted a visible rhino spike if the Google YOLO failed, and instead I got an across the board line bump. That really pissed me off because it makes my account look even more like trash. My recovery line from theta farming should look like this, but I guess I'm just being vain at this point. I thought about taking some of my winnings from my adult-sized account with Merrill Lynch and depositing that in to replenish, but I think it would actually be more dramatic if I don't, and I really don't want to mess up my chart any further. My account is slowly recovering from this shitstorm by utilizing theta strategies, and we're going to keep that going with conviction. Our goal this season is to break through our Season 1 highs, and this time with a stronger foundation as we make our way through the remainder of the recession. Technically, this point is about $270 higher than my actual account high because of that Trump bucks deposit, but that's okay because it just gives us a better goal for which to strive. But enough about all that. Let's get started on this episode's game plan. It's Tuesday, August 11th, and here's our plan of attack for Season 2, Episode 1. For our first move, I'm sustaining the PMCCs that I've been farming through the off-season. Those are AT&T, General Electric, GameStop, which has been phenomenal for my portfolio, believe it or not, and Snap. Snap was a late addition to my PMCC farm, but it's been working out very well. All of the premium from the farm has been getting reinvested into shares, which gives me a nice nascent portfolio to work off. And reinvesting into stocks on which I'm using the PMCC actually reduces some of the issues with using that strategy versus the wheel, which I'll get more into during the PMCC strategy episode. In any case, this gives me a nice little foundation on which to build my theta farm. The only PMCC that is not looking so hot is GE, which is down despite harvesting some premium so far. I need some more upside from GE, but the other PMCCs are working very well. But let's look beyond the farm. I need a trade to premiere, and I'm used to crowdsourcing my ticker from the most popular selection from previous episodes. But this time, of course, I have no previous episode for Season 2, and thus no ticker. So where do I find inspiration? Enter Marcus and Benjamin, founders of Wall Street Charts. They reached out and said, "Hey, we'd like to sponsor an episode of the 3K Challenge. Would you showcase our canvases on your channel? We'll hook you up with a canvas of your own on the house." I said, "Alright, let me see what you got." To my pleasant surprise, they've got a wide range of iconic charts that would look rock solid in any office or trading den. These taller ones initially caught my eye, but when I saw the perfect chart, I knew I had no other choice. Becky always beats the market. Not only is this universally true, but my daughter's name is Becky, which started as a joke and I hope it's still funny in 20 years, but I saw this chart and needed to have it, and it's going in Becky's bedroom as soon as she's old enough to read. If anyone else wants to get in on these charts, I've got a link in the description with the promo code Mikey15 for a 15% discount. I do get a 15% commission on any sales through that link, regardless of whether you use the discount code or not, and the promise I make to you is that I will YOLO any payouts I get from my affiliation. Thanks to Marcus and Benjamin from Wall Street Charts for sponsoring this episode. The boys hooked me up, and now we've got the perfect pretext for a trade. We've got a date with Becky. For those not in the know, Becky is a list of companies that white girls love. I'm talking about the kind of girl that will spend $19 plus tax plus tip on a salad and not see any issue. Since white girls will spend money on literally anything trendy, cute, fancy, or if it just smells good, those companies tend to perform very well. Among the Becky stocks are things like Ulta Beauty, Lululemon, Louis Vuitton, Etsy, and of course, Starbucks, the pumpkin spice flavored Becky trap. I've got about $250 of collateral to play with, so let's open up some charts and stretch these yoga pants. We'll look at Lululemon first, a classic Becky stock, and I'll say right up front, this website is stockcharts.com, because you guys ask, "Yo homeboy, what's the website with the charts?" Literally every episode, even though it says it right here. As for Lulu, obviously we can see right off the bat that Lulu is in a dandy uptrend. The RSI is showing momentum, and I don't think we're going to have any trouble getting above 70, so that's bullish. Price action and moving averages are both trending up, so of course that's bullish too. Volume is staying relatively stable, but that's common for trending stocks, so nothing marked here. We don't need breakout volume anyhow. The only thing not showing substantial muscle is the MACD histogram. The MACD line and signal line are coiling pretty tightly, which means the stock's rise or fall, in this case rise, on the 50 DMA is getting closer to the same pace as the 200 DMA. In short, we're no longer seeing an explosive rise, it's just steady. This is neutral, but since we have a substantial amount of bullish indicators, I'm putting an 8 out of 10 on Lulu's continued rise. Let's put Lulu on pause for a minute and check out one more Becky stock. A Becky portfolio is not complete without some Starbucks, so here it is. We'll start with an observation of price action, which for almost a month now has been generally pretty tight. Stocks can't trade that tightly forever, so it usually means a breakout is coming. We just can't tell when or in which direction. But I believe that breakout came today, when Starbucks had a nice upward move, so that one is of course bullish. The RSI followed it up and seems to be predicting more upside, so RSI is also bullish. Volume is not impressing me though. This is a pretty low volume breakout, which means that we still have some work to do before we can go ahead and buy FDs. Volume is neutral, and since MACD won't give us much yet, we can't really assess it. I'm not super bullish on Starbucks based on this price breakout, because we have such low volume and a thick 200 DMA to work through. But I think there is enough here to say that Starbucks will probably find support at this level. I'll put a 6 out of 10 on Starbucks sustaining a rally and going higher. Now the big question. When the market opens tomorrow, which one do I want to trade? I don't have enough collateral to do both because the strikes on Lulu are $2.50 apart, so I can only trade one. So when the market opens tomorrow, what do? I think Lulu is the obvious choice. It has the stronger technical indicators for a short-term trade, and that's what really matters. But the strikes on Lulu are $2.50 apart, so to trade Lulu, I'd have to put up all of my collateral, and the thetas between the adjacent strikes are only a couple of points apart. I wanted some collateral left over in case a second Becky spread pops up that looks interesting, and I especially want to start building up enough collateral to take on a 5th PMCC, so I can't quite bring myself to take on Lulu. Therefore, I'm going to take Becky to Starbucks instead, where strikes are only 50 cents apart and I can afford a spread with non-adjacent strikes. Starbucks is my second choice, just don't tell her that. It's the morning of August 11th, and I'm all ready to take Becky for a caramel Mussolini, so let's head over to Starbucks, ticker SBUX. Starbucks is catching fire for a second day, so I'm feeling pretty good about this breakout. Let's open up our options chain, and we're going to sell a put credit spread. So let's start by going to next week so the premiums are worthwhile. And we'll kick off by selling the at the money put at the 78.50 strike for about $143. And then flip to buy puts and buy the 77.50 for $99. I'll do one contract and I'll ask for $40 so Robinhood can get its cut. And SBUX is already rising, so we'll be in a good position if we get a fill. Let's give it a little while and we'll check back in later. Alright, it's been a day, so here we are on Wednesday the 12th. We'll do a quick review of our positions. The account overall is up just a smidge at $25.52, and the Snap PMCC short call is looking great. We're up $62, and that's our heavy hitter for the week. The trade again was actually from last week, but those 2-week at-the-money covered calls on Snap are money, literally. AT&T and GameStop are doing their thing, but most importantly, as for my Starbucks date with Becky, I did get a fill on the put credit spread at $40. Right now, Starbucks is making a small move in our favor, putting us up a few dollars right off the bat, and there's a take up to 15%. It was about 35% a few minutes ago, and my usual rule is to close if you're up 30% in just a few hours, but I didn't take that exit because this is the 3K challenge, and I'm enjoying the game, so I'm going to let this ride a little bit longer, probably until expiration. GE is still giving us a hard time. It's been the only real big loss so far with this big $230 over several months. Of course, I've pulled a lot of this back over the course of the PMCC, but if GE doesn't pick it up, this is only going to get worse. We've still got 5 months before expiration, so we've got some work to do, but slowly pulling premium will help us out even if we don't get some more life out of GE. So there we are. Let's give it a few more days and we'll check back in again. Alright, it's Friday the 14th, weekend's here, and my farm of poor man's covered calls is ready to harvest. This week we had all 4 PMCCs expiring. First is Snap, which again was a 2-week option from last week. I opened it at $84 and closed it for $2 today so I could roll it out. That gives us a nice $82 gain. Next up is General Electric. I only did one covered call and left the other leaps naked, but that one covered call opened for $16, and unfortunately I had to close it today for break even, so no loot there. Third is AT&T, opened for $10 and expired worthless, so we'll bank that Hamilton. And finally, old reliable GameStop, which I opened for $12 total between the 2 contracts and closed for $1 a piece, so that's $10 more. Overall, that gives our Theta farm $102 of cash flow, most of it off of a good harvest from Snap. My rule for the challenge is to reinvest this money, so I'm using the loot to buy 21 shares of GameStop for a total of $96.13. Like I've said a couple times, having shares of the underlying can help you be more aggressive when selling covered calls on your PMCCs, so this 21 extra delta will allow me to do that. Going into next week, I've already opened new covered calls on Snap for 28, GE for 24, and GameStop for another 24. And of course I have AT&T naked that I'll look to cover on Monday. But of course, the big play is my second date with Becky. So far the Starbucks play is looking solid. Let's see where this goes. This could be good. It's Wednesday the 19th, and our account came off of Friday's high a little bit, but all I really care about is Starbucks. This trade is looking real strong. We are up just a hair under 50%, and Becky is begging me to lock this in. I'm really tempted to close here and take the money, but I've waited 7 days for this $20 already, and there are only 2 days left for the last 20. Theta should really start kicking in here, so I'm keeping this play open. Our shares have some malaise here on hump day, but the farm is doing just fine. We've got a little snapback here, so let's hang out and let it all ride. Bad news, guys. Wednesday started off well, and the Starbucks spread was up about 50%, but at about 10:30, I met up with Becky and she gave me that "what are we" conversation. Someone must have told her that I wasn't ready to lock into gains, and things spiraled out of control pretty fast. I tried to explain, this is just a 2-week put credit spread, I like the way things are, I don't want anything to change, the usual lines, but she wasn't having it. Things went from bad to worse around 11:30, and I could just see Starbucks melting off. I was back to break even by noon, and I could tell I was about to lose her. I had one last chance to close out at about 150, but kept thinking Starbucks would start climbing back up. But the truth is, I wasn't listening to the signs. The breakout had obviously failed, and Becky was telling me that if I wasn't ready to make the commitment and close the spread, she was going to go away. Fine, I said, fine, and the breakout turned into a breakup. And then she went away. Starbucks dropped off and never came back. On Thursday, that spread started peeling value off of my account. I closed early at $78, locking it in at a $38 loss before Becky could run away with all of my money as well as my heart. Closing early at $78 for a $38 loss prevented what would have been a larger loss of $60 if I held till expiration. While I half expected Starbucks to get right back to flying high with the guy I just sold the spread to at $78, I was happy to see Starbucks stay in max loss range until the end of the week. Sometimes, it's best to let something go when it just isn't working. Although that breakup hurt, it was, perhaps appropriately, GameStop that really came through for me. On Friday, GameStop went on this ridiculous nearly 21% screaming rocket up to above $5.50. Luckily for me, I bought back today's $5 covered calls for $1 each earlier in the morning and locked in the gains so I could roll to next week. But check out what's happening with these positions right now. I've lost $80, or over 300% on these $5 covered calls expiring next week. Someone just made a killing on these things, and it's not me. And today's $5 expirations, the one that I bought back for $1 today, must be up to like $40 each. But this doesn't mean I actually lost $80 on the poor man's covered call, because 1, it doesn't expire until next week, obviously, and 2, because I set up my PMCC correctly, I still get more delta from my leaps than I'm losing on my covered call. So I am up $100 on my leaps for a $20 net positive, even though my short call is now deep in the money. And let's not forget, I bought 21 shares of GameStop earlier in the week, putting me at a holding of 48 shares, so I'm up about $35 on those as well. As happens to so many of us in real life, my breakup with Becky at Starbucks sent me to video games, and here the next day, GameStop is through the roof. Interesting. Overall, I'm up $61 today so far. I do expect GameStop to come down a little bit toward the end of the day, since this rally is way overextended. That will actually be good news for me, since it puts my short calls back in play. I've decided not to roll because I expect GameStop to come back down. I think this is a pretty good arrangement. Let's let these trades ride through the afternoon for expiration. It's Friday afternoon, my favorite part of the trading week when my Theta farm is ready for harvest. Last week I sold the snap covered call for $28. I bought that back today for $2, putting me at a $26 gain. I had opened General Electric for $24 total, and those both expired worthless, so I'll keep my full premium. AT&T was a small play. I sold it for $6 and bought it back for $1, so that's a $5 gain. And finally, GameStop, the big boy. I sold covered calls for $24, and fortunately I bought them back today for $2 total, so that'll put me in for a gain of $22. From the farm, I pulled $77 this week. However, I did experience that $38 loss on Starbucks, knocking me down to a cash flow of $39 for the week. Still doesn't feel like a profit since some of my leaps and shares decreased in value this week, but I do actually have more cash than I did on Monday, and that will be reinvested into shares. I made enough off the farm that I could have bought a share of SBUX, but after that difficult time with the put credit spread, do I really want to simp for Becky right now? The answer to that is no, absolutely not. Since that 77.50-ish support level is still intact, I think SBUX actually is a buy at this price, and you might do well by catching her on the rebound. But I think I will get a lot more out of reinvesting into my PMCC underlyings, and honestly, I'm still bitter about not closing when I had the chance. I am a little over leveraged in GameStop right now, so instead I will use most of this premium to buy a share of Snap, and then pick up just 2 shares of GameStop to put me at an even 50. I planted some new covered calls in my Theta farm today, so going into next week, we've got GameStop for $26 premium, Snap for $28, AT&T at $15, and one of the General Electrics in for $8. Plus we've got the one General Electric naked that we will cover on Monday. So at least $85 of premium will expire next week. And GameStop did come back down to just above $5 today, so we are looking good going into the next episode. I was hoping to close with the account above that $2,600 ceiling, and although we did touch it this week, the SBUX loss kept me pinned underneath. Next episode, we'll break through that ceiling and keep the farm cultivated. Overall this episode, we made $105.80 and used it to pick up 23 shares of GameStop and 1 share of Snap. This translates to a gain of 4.26% this episode, and we are up a whopping 45.7% from our 1776 low back in April, due almost exclusively to a strong performance from the Theta Farm strategy. So, there we have it. Not the season opener I had in mind, but the PMCCs took care of us and we are well on the way. You guys know the drill. Reply to my stickied comment below for the stock you want me to trade in episode 2, vote on the stock you like, and I'll pick whichever ticker gets the most thumbs up. Thanks for watching this whole thing. Don't forget to like and subscribe so you can catch the next one, and follow me on Twitch for live streams throughout the week. Thanks again everyone, and see you next time.